And it's been doing nothing for 6 months, but the chart itself is actually quite interesting because I think it's been doing nothing for 6 months, but I feel like it's like that Coke bottle getting shaken up, and I think it's ready to go the other way.
But I mean, it's not just the precious metals. I think what we've been seeing on the ASX, the small caps especially, the tech side is still getting hammered, still really kind of licking its wounds from those earlier sell-offs, but the resources are still flying. It doesn't matter. You could throw a dart at the resources right now, whether it be uranium, whether it be copper.
I've actually got to dump everything, because we could be heading towards a crash or a multi-year correction or what have you.
G'day, welcome to a Christmas special for Closing Bell. I'm Charlie Orman here for Fat Tail Investment Research, and I'm joined by Chief Trader here at Fat Tail, Murray Dawes. Happy Christmas, Murray.
Merry Christmas.
Merry Christmas.
And Merry Christmas to everyone out there.
Merry Christmas to everyone here. Thanks for watching. We've got a lot to cover today. There's so much going on to the markets. We've obviously had interest rate cuts in the US, interest rate holds for the RBA and the Aussie dollar. The impacts on the Aussie dollar and the US dollar are something we really think we will highlight today, as well as a bunch of movements within the stocks. I think the resources are something we're going to talk about, as well as a kind of a longer term, what we're seeing in 2026. But this will be our last episode for the year, coming up next week. What have you got, Murray? Tell us about it.
Well, I've thought while I'm away, because I'm heading off on a cruise for the next few weeks.
Very nice.
And I thought I'd put together a crash course in my trading model, because I'm sure there's a lot of people who are watching who maybe have joined without learning about how I look at charts and why. And really, I've built up a trading model, a technical trading model that's based on my own observation over many years. From the trading floor all the way through to whatever I've done. So it's not necessarily something you're going to read in a book. So I thought I'd just go through some of the key aspects over 3 weeks. I'm going to do next week will be on distribution, so how ranges form, why they form, why at this point of control, the areas where prices change direction, all that sort of thing. So I give you a real overview of that. The next week after that, I'll look at the buy and sell pivots, how I combine them with areas within ranges and trends of where reversals occur. And so I can explain that for you. And then in the last one, I'm going to look at trends and tie everything together to have a look at an overall model of market behavior, of price action. And by the end of it, I'm hoping you'll understand why I say what I say, why I give you targets and say things are probably going to head here, et cetera, et cetera. So you don't think I'm just pulling numbers out of a hat. There is actually a model that I use to explain things. So I won't be giving you my secrets, but I'll give you a nice bird's eye view of the model. I won't be giving you, of course, the secret sauce that actually
That's kind of what I was saying. If you've been watching along, you've been scratching your head when you say point of control or pivot, it's kind of understanding those concepts so you can understand.
Yeah. And so from then on, you'll understand everything I say and you'll be a pro. So hopefully you do check in over the next few weeks while you're hopefully doing nothing and having a break like me.
Relaxing.
Yeah,
well, we've got so much to cover today because there's been so much going on in the markets, and obviously it's our Christmas special. We want to talk about what's happening next year.
Yep.
Should we start with the interest rate hold and the interest rate cuts in the US, right? The RBA in the Australia left rates on hold at 3.6%, whereas we've seen the quarter point cut in interest rates in the US. So we've got this kind of gap here.
It's pretty rare for Australia to be going on in its own little path, and it's interesting that our inflation, of course, we all know it from every bill we open and every time we visit the shops, that prices just keep going up and up and up. And so we are at this sort of crossroads, isn't it? With US actually dropping rates and we'll be raising rates.
Potentially,
that's a funny old situation
for
our economy to be in.
It's a rare situation, and I feel like the best proxy for us to see it is through the Aussie dollar, right? It's been whipsawing this week.
And it's been doing nothing for 6 months. But the chart itself is actually quite interesting because I think it's been doing nothing for 6 months, but I feel like it's like that Coke bottle getting shaken up, and I think it's ready to go the other way. So I thought I'd start with a bit of an overview of the big picture of the Aussie dollar. So this is very long term. This is going back, that's 1990. So you can see here now these really big picture waves and what the Aussie dollar's done. So, there's 50 cents down there, and there's your dollar. That time we had that short period where we were actually above the US dollar, which was awesome because that's when I went to New York and everything was really cheap and I lived like a king. But since then, this has been a very long-term downtrend, hasn't it? And I think my point is that we may actually be near the end of that very long downtrend. And what's interesting, if we look up close and personal with what's been going on just for the last few years, I want you to note. So I'm going to just start with the really big picture, just so everyone gets the sense. Like we're still in downtrend. So just note the wave structure of this over many years. It's very classic, isn't it? So we've got that, and there's your most recent wave down, right? So that's what I'm making my calculations off. That is the most recent down wave in this whole structure. So here's your buy and sell zones of that structure. So here we go. There's your sell zone of that wave, and here's the buy zone of that wave. And it's very important because we're sort of seeing signs that this may be the end of it. We're sort of nearing the end of this period and might be ready for a bit of a serious uptrend, which might surprise to the upside. So it's been bouncing off this area and really been sort of stuck between the point of control of that wave. So there's your point of control here. There's a midpoint, which you'll learn all about over the next few weeks if you don't know what that is. So that's around 68 cents is the midpoint, and the buy zone is between 58 to 61 cents. So you can see it's pretty much been stuck there since 2023, just really bouncing around in between that whole zone. And I think we're getting near the end of this process. And why I'd say that is this is the first time. Here we've got this is a quarterly chart, by the way, 3 months of trading. Now that is actually a quarterly buy pivot there. So that's your first quarterly buy pivot for, well, how long? A long time. So there's your quarterly sell pivot. And there's years of selling pressure. So this is the first sign of, okay, we are actually seeing enough buying pressure. And it's been just going sideways for 6 months. So I'll just quickly go to the monthly chart for you and just show that the sense of the Coke bottle just shaking up. And you can see on the monthly trend has actually just turned up. We got a little false signal there a year and a half ago. Then it went on another leg down. So here it is. That monthly trend is actually just turning up now. And it's been really going sideways for months and months and months. And we're just nearing the high of this move so far. So above there, it's sort of looking like it's easily going to get back to the point of control. But remember, it's not going to take too much for it to break through that next high, which would then be the highest level since, when's that? 2023. So there's a lot of dominoes lined up here.
For sure.
That if it goes, it can sort of go. And I think it's getting ready to do that.
Do you mind going back to the prior chart? I just wanted to look at something and kind of discuss it with you, because it's interesting you point out the other long-term trends we saw from 2001 moving through into kind of 2011. And that was, I mean, there's so many other macro factors that come into the Aussie dollar, but that is clearly, the prior commodity super cycle, right?
Yes.
This is us trading with China, that iron ore trade being defined, their construction. And it's interesting now as we see this thing starting to turn up that we are now predicting in our sense, and we chat a lot about it in the office, about the next commodity super cycle and the kind of resources return to primacy. So it does look like that cyclical thing could turn around. So.
Definitely could. And, this has, you can see that on the quarterly chart, there's my, so that's, if it's a quarterly, that's like a 5-year moving average, because that's a 20 times 3 is 60 months. So that's 5 years. So that's like a 5-year moving average. And there's a 10. So 10 threes is 30 months. So that's, 2.5 years. So that's really long term. But you can see it has been all right for these really big picture trends. And you can see it's actually been in downtrend since then, since 2013, 2014. And it has never really quite turned up. So, we might be on the edge of this actually switching and getting a really long-term buy signal on this Aussie dollar. That may be the story for next year.
Yeah, interesting. I mean, the thing that is currently shifting this needle more than anything else is obviously the big changes with the quarter rate cut in the States. What have you seen there? The Aussie dollar is obviously looking this great, but consequently, the US dollar is looking so weak right now. It's looking very dangerous.
Yes, it's again, we're going to look at the long term and just consider this monthly chart, and everyone can see, I'm sure, that it's in the downtrend. So it is in monthly downtrend, and when a downtrend is strong, it will hit the 10-month, and the selling pressure will be there, and then it will go on the next leg. So you can see through here, the buying pressures, as it's going up, it keeps buying along that 10-month, and as long as it's holding above the 10-month, it's like in strong trend. You can see there, here, hits there, the buying pressure's there. So here, and the selling pressure, it's like, here's the first retest after the monthly trend turned down, and now I got the monthly buy pivot. It's like, this could be trying to do a short squeeze within the long-term downtrend, but as soon as it's hit that, it's turned back down, and this could be a monthly sell pivot this month, which would be a sell signal within the long-term downtrend. So it's like you get a short squeeze, and then you get another sell signal, and that's often, right, watch out, this can now go.
Because it does seem like, looking at what the Fed speak, as they call it, when people are kind of pivoting off every single word that Jay Powell says, right? He was saying how this quarter rate cut, they're going to probably pause from here, that they think they're at a neutral place right now in terms of the interest rates, so there's no pressure, whereas, we've spent 2024 and much of 2025 in what they would call a restrictive phase. Now we're seeing, the QE, not QE come through, but it doesn't seem like the market believes him that this is just going to be a one and done cut.
Well, it's May.
Exactly. When he gets the knock, then whoever next comes in, which we can chat about later, but the potential yes man, it seems like this whole debasement trade, or the fear that the US dollar will continue to fall from here, is a real one. You just have to look at the US 10-year yields, right? They're shooting up. Same with the Japanese bonds. So there is a lot of macro things moving around in this space.
That'll probably, I wrote a tongue-in-cheek analysis on what could happen in 2026, and it was really based around the Fed chairman, new yes man coming in, and the midterm elections in November. So Trump will want the economy absolutely humming in November to give him even a hope in hell of doing okay in the midterms, which he probably won't do well. But he's going to want to put pressure to say, right, let's lower rates as far as we can now, and the economy should be humming by the time November comes around. So that's in my head. If that is what's going to happen, what are the repercussions of that?
Right.
And maybe it's rates really going down, maybe the long end starting to kick higher, worries about inflation coming back in. So maybe that yield curve really steepening being the wild card that Trump doesn't expect. That could really happen. So that could be interesting if that goes that way.
Yeah. But, he said he's already made his mind up about who it's going to be. We have no idea, obviously. But, the betting market is saying it's Kevin Hessent is potential. But, however it is, the big thing is debasement trade, right? The concern here, we just have to look at precious metals, which have been, again, flying, gold and silver.
Yep.
Do you want to look at, a lot of people look at gold. Should we look at silver? Because it is a bit more interesting in terms of that chart, which is...
Well, that's pretty remarkable, right?
It is insane.
It is pretty remarkable. But when you consider where silver was in 1980, and you think of a $50 in 1980, what's that now? That's nearly $200.
Yeah.
So... but that was a totally cornered market. But even based on the 2011, where that is now, based on inflation, is up around 97.
Yeah, just for context, the 80s, it was like a specific play from someone.
The Hunt brothers cornering the market. So that's a complete
That was a weird
craziness.
aberration.
But still, in 2011, we got up to test that $50 level, and that would be equivalent to about $95, something like that, just based on inflation. So, and you can see, and I think there is probably... some short positions getting absolutely killed at the moment. So it looks like a bit of a panic move. But you can see, based on that, that's a very long term, around 50, and it's actually broken through. So it's like, it's blue sky now. And, where does it go? And look, maybe it ends up being like, we can see how silver moves, big spikes and then the failure.
And it goes.
Big spike and then the failure. So, it might be like that. Before it goes, you don't know. So this is an interesting situation where you're really seeing this historic moves.
Yeah, I mean, it's always the speculative cousin of gold in that sense. But, more and more people are convinced that there's, obviously the range of industrial applications is always expanding for silver. There's always new uses for it. But it is always kind of that gold speculative proxy there.
Yeah,
and it's interesting to see it move that much. But, I mean, it's not just the precious metals. I think what we've been seeing on the ASX, the small caps especially, the tech side is still getting hammered, still really kind of licking its wounds from those earlier sell-offs, but the resources are still flying. It doesn't matter. You could throw a dart at the resources right now, whether it be uranium, whether it be copper, whether it be lithium. They're all
but the base metals aren't still.
It's true. That's true.
All of your lead, aluminium is sort of looking okay.
Yeah.
Nickel. So there's still that doldrums in that sort of space.
Yeah.
But as far as the lithium, rare earths starting to look interesting. Copper's the one that's looking like it's going to absolutely take off as far as I'm concerned.
And we picked all of these in the last few weeks, and I mean months before that even. But especially the recent ones we've been looking at have been.
Yeah, I mean this is the lithium, and it's also battery tech. This is a great one, the LIT, the ETF. And I'm hoping there's plenty of people watching here who know that from this whole area I was saying time to buy. And I even gave these guys, Pilbara and Liontown and Mineral Resources all, before my guys even got in, I gave it out for free to closing bell people. So I'm hoping a few of you got on that. And you can see it's just a beautiful example of what I look for. The big clear out, everyone gives up the ghost, and then the momentum shift. Couldn't say that. Momentum shift, long-term trend shift, and bang, off it goes to the races again. So that's been a great trade this year. Also, uranium's been a great trade, and looking like it's trying to turn up again on the weekly, especially. The monthly's looking a bit sketchier, but I'm thinking uranium could be the story for next year.
Certainly, this week we've seen some of the biggest moves have been in the smaller uranium players.
So I think copper, uranium, the lithium rare earth story, all these things are going to feed into 26 and possibly really get going, because I feel like uranium still hasn't completely taken off. Like if you look at this, it sort of feels like it's been this has really been the last few years, right? So it's like a building up, trying to go. The market's still out of balance. It's still oversupplied. The long-term contract's still rolling off. So you're still the people who need uranium haven't needed to stock up for the next 10, 20-year contracts. So it's sort of all that argy-bargy trying to work out, how is the market actually positioned?
It is a lot thinner trade on the spot markets as well, and it's a lot harder for people to model because the demand curves are so hard to, if one nuclear power plant is online or not, that's going to completely change modeling for a region. So it's much, much harder, whereas, a lot of people are in agreement that supply deficits for copper are a likely scenario.
Yeah.
But for uranium, it's much, much harder to say, is China bringing on 40 new plants or are they bringing on 80? Like we couldn't tell that, and what's the US going to do? Then, of course, on the supply side, it's so constrained with single people. Like, what's the Kazakhstani mine that is a huge percentage of it? Kazatomprom, yeah. And they've had problems with sulfuric acid.
Yep.
They're building a new plant beside their mine to try and fix this problem. But we've seen sulfuric acid has been one of the top performing commodities of this year. So there's some supply imbalances.
And the thing is with uranium, we know what
Yeah.
the supply is going to be over the next 3-5 years. It takes so long to bring them online. So you can pretty much model, right, this is how much the market can supply.
But
and if things get out of balance, you're not just going to go, now we can supply a lot more. It's like, no, this is pretty much what we can do.
Yeah,
but
the question mark sits on the demand side is the thing, right?
Yeah, if that really takes off, all of a sudden it's going to be way out of balance. Because if the demand really in 5 years really takes off and the supply just can't move quickly enough. So you could get a few years where this is what I'm saying, of it's been working and volatile, and yes, the buying's come in. But really, that to me is a market that's sort of stuck in a range for the last few years. It's trending higher, yes, and it all looks good, but we still haven't seen this yet. And that's what I'm thinking is coming. It is something that is a multi-year bull market. So I think you've still got time to get on.
Yeah.
And actually, it's got a little weekly buy signal there.
I'm certainly a believer.
On that URNM.
Yeah.
So
I mean, since May this year, Trump has unleashed something like 5 different regulatory pushes and deregulations within uranium. He's unlocked the ability for them to use spent nuclear fuel, right? So there's a lot of enrichment cycles going on through that, including Silex is one of those that has access to that. There's a lot of pushes for both the Department of War, old Department of Defense, and now you have got 19 different microreactor pushes in all these sites. There's so many small little initiatives where they're really thinking, hey, we're going to maybe quadruple our nuclear capacity. And that's just, the US. If that shakes down to other places, the tide could really shift.
Yeah, I reckon that's definitely one to hold on to and to keep building over the next year.
Yeah.
What else have we got?
I mean, you've looked at copper, you've looked at uranium.
We didn't really look at copper, did we?
Sorry, yeah.
Yeah, let's have a look
at that, because I think that's been an interesting one as well. We mentioned this obviously last week, and we gave a little free pick away, which has been doing pretty well, I believe. There was Firefly, in case you guys missed that one. It's a lovely little high-grade copper pick in a Tier 1 jurisdiction. But yeah, I mean, all of these commodities have been doing so well, and the common theme is always this kind of long-term supply deficit in a world which needs more energy, right? Even if we take away the data center thing, which is obviously the huge theme of why we need so much energy, there is still a need for energy and electrification within the West, within the globe more broadly, and that will be clearly around things like copper for all of the electrical applications that it has, which is innumerable, but also uranium. So it's a big electrification story that's a global one.
Yeah, and the copper chart is, for me, it's just such a classic chart. It's so sort of really stands out to me across the board as, and I've been saying it to people for a long time, same thing over and over again because it's so slow moving. But this is, decades of copper bouncing up against $4.55 a pound. And it feels like it's done with that now. And this is, and the trend has been so steady, and you can see the structure of this is absolutely perfect, always coming back to the buy zone, finding the buying pressure. So it's like, again, the Coke bottle getting shaken up, and now it's sort of heading really to blue sky. That was the Trump, thing that caused the problems, why there's no copper anywhere in the world apart from America.
A 50% tariff overnight kind of. It really does more for market.
But it's just, for me, a pretty classic sign of something that is getting ready to do something like this. And I'd almost do a measured move on a percentage basis of something like that, saying this is what we're probably going to see. Is there's your pullback, and then we're going to need to go on a big move. So I think copper could surprise to the upside next year.
I've heard some people push back and say that this scrap market is starting to mature. I mean, it's always been a huge part of it, and copper's the most recycled metal in the world, and has been for hundreds of years, really. But they're saying that it's kind of maturing even further, and there might be people discounting the amount of scrap that's available.
That could come online. And the higher it goes,
the more the demand that has come for it. Yeah. These are interesting, though. I mean, it's interesting. We're just banging on about commodities these days, but it really is the place to be talking about. And should we kind of zoom out and look at what we're thinking of for 2026? Because we've both recently written our predictions for next year. We won't share those. You can read those on the Fat Tail Daily website, or if you're a subscriber. But what are you seeing for 2026? What do you think are the big themes you want to talk about?
Well, I try to, and this is being a trader, where I try not to predict too much and try to be like a cricketer, that you're a batter and you're facing, there's a fast bowler coming at you, and you just trust that I've been batting for so long that whatever this ball's going to be, I'm going to be able to react. So I allow the market to do whatever it needs to do, and the more I have a view and I then start to want that view to be right, and I start to view the market from the point of view of a bias, having the confirmation bias. Your ego's protecting the idea. View, and so I really allow the market to do whatever the hell it's going to do, and just know that I can react and have a model that can react to those moves when I need to in a timely fashion. So I try not to have too many views about what's coming next. But as far as the trends go, I mean, all I can say is look at the trends and say, look, there's no signs yet that I need to get too worried. I'm long. I've been buying quite a lot lately in the retirement trader for sure. been a bit more wary of the US, thinking the AI trade, whether it is actually under pressure, and Oracle
do you want to briefly
hammered.
look at some of them? Because we had an interesting chat about this before, actually. We probably should have covered it earlier. But it's kind of this gap between the S&P 500, which is, let me just clarify this. Sorry, zoom back. We've seen, since the Fed cut, we've seen the Dow, the S&P 500, the Russell 2000, and the Nasdaq hit all-time highs, right? Maybe the Nasdaq is slightly below that, but that's a big point of that, is that the tech is not quite flying at the moment, but the rest of the market, especially
it's a bit of it feels like a switching with the interest rates falling.
Yeah.
It feels like there is a bit of a switch from the overvalued tech into the real economy, saying that things are going to start picking up here. So that's quite interesting, because here's the Russell 2000. So there's the S&P, which is still
looking
strong, good, right? But it still hasn't taken out the high from a few months ago.
Sure.
So it's looking good, but it's and there's certainly no signs there of you got to run away at all. So for me, it's like, okay, that's all still trending and fine. But when I look at the Russell 2000, that looks really solid. Like, and remember, that's been held back, so it hasn't been doing well. Because if you look at the high, that's actually the high from, when's that? 2021 or something. So we know that the rest of the market, with the Magnificent Seven's been flying, everything else has been pretty hard. And this is sort of that sign. This is looking like a pretty fair breakout. I mean, look at something back here. Here's 08 through to 2013. So there's the pretty much banging along, not quite able to move. I mean, compare that structure, what you can see there, to what we've seen here. A lot of work, sort of retested it, failed, and now here it is busting out. That's looking pretty impressive to me. And when the Russell does break out of these ranges, look at that. How similar is that, again, to what we're seeing here? It all looks like a mirror image of it, doesn't it? The retest, the failure, and then the final breakout. And then what happens? Bang. Bang. Are we actually, is that the real sign that we needed to be looking at, which I'm interested in seeing, which gives me sort of heart that, okay, this is actually looks good. And that there may be that switching out of the overvalued tech into the real economy.
I mean, the smaller caps always love lower interest rates, right? Because they're always trying to expand, they're trying to take on debt and use that to build their market out as quickly as possible. But it really does feel like that, if we do get the yes man, or this kind of idea of a large interest rate cutting cycle in the US, that these small caps could be the growth story that takes over from that.
Because they've been lagging,
and
there could be some great things to pick up, some undervalued companies.
It's a really interesting one. So that is a big theme, you think? So it's this kind of shift away from tech. I think that, we've said it before today, but I want to mention it again. This debasement trade, I think that is a worthy thing for people to look at. Even though gold has been one of the top performing assets of 2025, I think it still has room to run in a future in which we're expecting interest rates to potentially go much, much lower.
Absolutely.
Yeah. So whatever that may be, maybe even Bitcoin within that space, although that is the most risky one at the moment. It's still looking in the 90s, but I think that's a really interesting play. What do you think on the converse side, for the ASX, where we've got rates on hold?
This is it. We're underperforming. Where our rates going up versus, and so we have been underperforming for months. And it's a different chart for the ASX, and I think today we're probably going to get a weekly buy pivot, which I'll sort of show you in a second. So it's been negative, and I've been, this is not looking that great, but it's not bad enough for me to run away yet. But I'm just seeing a short-term little buy because the US is lifting all boats, sort of thing. So thankfully, with me going on a cruise, is that the weekly buy pivot for me is a bit of okay, I can relax a little bit here. And the weekly buy pivot may turn into taking the weekly trend. So let's just have a look at it, just so we understand. We've had our high a few months ago, and it's been quite a big sell-off that we've seen. And this is basically the rates, 10-year bonds going from 4.1 to 4.7, 4.8% in a few months. Like, that's been that's a big shift. So we're really trying to adjust to that. And the way I'd look at this from a bearish point of view, you can see this is a weekly chart here. And because we're in the weekly downtrend, you can see in the past, once the weekly downtrend sort of hits, I mean, it can turn into either a really sharp, terrible sell-off, or just a lot of work and a correction. It's just not really moving. It's difficult.
Waiting.
It's just difficult, and it's not really. Yeah. So we are in that now. But as I said today, like we're actually rallying, and we'll have the first weekly buy pivot in this whole sell-off. And just to show you, there was the April sell-off, which went right to the buy zone of the previous upwave, and then the weekly buy pivot was here, right? So there's your first little sign that, hey, this might actually be turning around, even though the trend's all still down. And you can see at that moment, it went bang and really took off. So maybe we're going to do that, weekly buy pivot, and we can turn the weekly trend to up. And all of a sudden, it's like, okay, we're away if the US is really taking off. So that could be our future.
I mean, it is a thing where I'm hearing from the market, whatever we see within the rates, is they're not really believing the RBA when they say, we're not going to look at rates until mid-2026. It's probably only going to be one cut. Like they're currently pricing in 2 to 3 already. So there's kind of this thing where they imagine that the US is going to drag the RBA along, and eventually we're going to have to start following their rate cutting cycle. Otherwise we're going to be too far out of whack, and it's just going to create a terrible situation for the Aussie dollar, right?
But if inflation keeps bubbling away, they're just going to have to, they're rolling off that rebate for electricity, and electricity. I think electricity prices are just going to keep going higher and higher here.
So it's the trend is fiscal dominance, right? That's the idea where you kind of you're favoring your stability, so you're disfavoring the stability of that to allow this kind of dealing with the debt within the US and dealing with these problems that you've got within the system. The Western market is kind of over a barrel there, and that means that debasement trade is potentially a really, really good option. That's my 2 cents on it anyway.
Yeah, right. And so back to the ASX 200, just how we are, and why I'm sort of saying, this looks good for the short term, but I'm just wary that what we're going to see is, if we're looking at this wave that we had here, I'm now sort of looking at this sell zone as a bit of a danger spot still, that we could see a good rally, which then takes us to the new year, and everyone's like, it's all bullish again. But then if we see the selling pressure come out there, that's when I'm sort of like, okay, this is setting itself up that it can still do this. We can still underperform, and it can still end up turning down. So that's why I really would like to see, before I get too bullish, would actually like to see that weekly trend shift and really see the buying come in and breaking out to an all-time high again. Bang, that will get me really excited. If I see it just pick up here now, and the buying really, and the Russell 2000 is the thing that got me, okay, this is good. That we're seeing that money going into the mid-cap, small-cap space, the cycle maturing, things, interest rates coming off there, and really growth then starting to take off. That could then drag us. It could be, and especially US dollar coming off, commodities taking off. So maybe this is just a bit of a short-term, correction, and then we're going to continue this uptrend. Because really, the uptrend is still in play, right? It's all still fine. So this could just be a short-term correction, then bang, off we go. So I'm more than willing for it to go 100% bullish, by the time I get back from the cruise.
Yeah.
That'd be lovely. So
are you going to discount, sorry to cut you off, are you going to discount other things in the short term? Because obviously when you get this close to December, or this Christmas period, traders start going on holidays, volatility starts rising because the books are so thin, there's not a lot of people trading. Do you discount that? Are you watching that in any sense, or you kind of come back in January and refresh face?
You set up when you're trading, I think you set up, once you're in, because I'm not going to add any positions.
Sure.
You've got your stop loss, you've got your target. Whatever happens, happens. You're like, if I get stopped out, I get stopped out. If I hit the target, I hit the target. And really, you shouldn't be watching it at all. So the portfolio's there. Everything's looking good. There's no reason to run away yet. But look, if we end up rallying and then turning back down, I can take evasive action if necessary. But really, big picture, it's all still looking fine. Like you've got to always look across all time scales. And from the point of view of I've got a monthly sell pivot there, which is like, okay, this is possibly dangerous, but look at the trends. Look at the monthly. I'll just get rid of the drawings, so we'll finish up now. But really, look at that big picture trends, and until we get that trend turning down, right? Until I actually get a signal, and even there, Well, we're miles away from that, aren't we? So there's nothing there saying, right, I've actually got to dump everything, because we could be heading towards a crash or a multi-year correction or what have you, or something like this, the COVID crash, or 2 years of doing nothing, So I'm nowhere near that yet. So it's able to just run things and see how it goes.
Yeah, fair. Well, that's a pretty positive way to end the year.
Yeah.
Well, thank you all so much for watching us this year. Just a reminder, next couple of weeks or 3 weeks, we've got some amazing little tutorials from Murray to go through some of his trading ideas. But feel free to leave some comments. We'll have a look at those, and we'll see you in the new year. Thanks.
Yes, and I hope you've made some money off the calls during the year. And if so, leave us a comment.
Yeah.
Say Merry Christmas. And hopefully I'll be coming back early Jan, and we'll get stuck into a new year of making money.